All right, welcome back to Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy. Thank you very much for joining us. If you're just joining us to see how things are finishing up here, and if you've been with us all day, thank you for that as well. Let's jump right in and see how these markets are doing. Let's look at corn first. Up 4 1/4 going into the close here. 7.76 1/4 is last. That's 2 cents, 2.5 cents off the highs in that July market. Yeast is up 7 3/4 cents to 7.18 1/2, just a half cent off the high. So finishing strong in that corn market. Let's take a look at soybeans. Soybeans are also higher today. Let's see about how much. 5 1/4 cents higher in July to 15.90 1/2, making a run towards 16. Probably won't make it today. It's September. Well, let's go to November. Up 7 cents to 14.53 3/4. All right, how about wheat? The wheat market is going to be a little bit better in Chicago. 4 3/4 cents higher in July. 10.97 1/2 is last. And then in March is up 5 3/4 cents at 11.08 1/2. So that's the deferreds. You can see what we're doing there, but we're higher, and we'll take that board after yesterday. How about hard red wheat in Kansas City? 10 3/4 cents higher in that July to 11.75 even. 4 cents off the highs in July. We've got double digits across the board here. Let's go out, say, even to December. 10 1/4 cents higher out there. 11.82 1/4 is last. 4 cents off the highs out there. How about spring wheat in Minneapolis? Let's take a little bit visit to Minneapolis. 6 3/4 cents higher in that July contract at 12.13 1/2. While we've got, say, March, the deferreds out that curve. 9 cents higher out there. 12.07 3/4 is last. And finally, let's take a quick peek at cotton. What's happening to cotton? Well, we've got that July contract up 64 points to 143.57 with a 3-cent range today. Okay, let's bring in Ted Seifried from Zaner Ag Hedge in Chicago. Ted, thanks for joining the show here this morning, or this afternoon. Boy, time flies when you're having fun, I guess. What's anything stick out at you? Anything notable?
It's fairly quiet in the grains today. We started off with some strength. We gave some of it back, and now as we're getting into the close, we're refining some of that again, which is great to see. The big mover today has been crude oil. Over a $5 range in crude oil. It's been pretty wild. And now it's kind of just in the last, 35 minutes or so, really picked itself off the lows pretty good. So earlier, I was worried about what was going on in soybean oil, well off the highs. If crude breaks this very key resistance level, today's low is basically trend line for crude. If it breaks through that, that's really bad news for crude oil. It might actually just be really bad news for commodities as a whole. So that's something I'm watching very closely. Obviously, that has an implication on ethanol and biodiesel, so,
Yep.
Soybean oil and corn. But other than that, the big thing in grains coming up is the report that we have on Thursday. And I'm just kind of going through the average trade guesses for what we have for the report. And I'm a little bit concerned about the corn carryover number that the trade is looking for new crop. And the main reason for that is because I'm concerned about the production number that that the analysts are using for this USDA report. It seems that a lot of the analysts have taken liberties in changing the yield and possibly even changing acreage when we know that the USDA will not do that.
Right.
We know that the USDA is going to use the planting intentions acreage number, and we know the USDA is going to use that 181 trendline yield that they have from their Ag Outlook Forum. And so what it's doing is it's giving us a 1.352 or right around a 1.38.5 billion bushel carryover for new crop corn. But I think that should be closer to about a 1.5 billion. Now, in the end, I really do agree with that 1.35 or maybe even lower. But that's because I think production is going to be less. And we know that the USDA is not going to do that. So I don't know. I worry that the expectations for this report on new crop corn carryover might be a little bit tighter than what
I agree with you.
the market's got factored in. So that's a concern of mine. We'll see what Thursday has to say.
All right, we're going to hold that thought. We're going to go away, pay some bills. We'll come back and talk with Ted Seifried from Zaner Ag Hedge after these messages. Okay, welcome back to Market Day Report. I'm Scott Shelley. Let's dive right in and take a look at what's going on with these livestock prices. If I bring up the live cattle in Chicago, what's going on there with these prices going into the close? Well, we're trading heavy. That's been heavy all day. June's off $1.17 to 132.37. And even out the deferreds, let's go, December's off $1.27 to 147.52. So that's a dime off the lows out there in that December. So trading heavy when it comes to live cattle in Chicago. How about the feeders? Pretty much the same. August is off $2.10 to 172.12, and that is about 10 cents off the lows there. And then October, say it was $1.90 lower, $1.87 lower now at 177.77, and that's about 20 cents off the lows there. So both of the cattle markets trading heavy. Lean hogs, well, what's this? It's not doing very much lower, and it's been lower all day, but just kind of laying there, right? June's off 32 cents to 100, spot 97. Let's bring back in Ted Seifried from Zaner Ag Hedge. Ted, thanks for sticking around. What do you think?
The cattle trade's been interesting the last couple of days. When you have the sharply lower stock market yesterday, you think, oh boy, cattle are going to be down hard because we're going to be worried about demand. And we were. But then we came back really well and managed to get that August contract back over the 200-day moving average. So you're thinking, oh, wow, that was a nice technical reversal on a day where, fundamentally speaking, you had outside markets really suggesting we should be down and stay down. And we didn't. But then now today we're down sharply, as you mentioned. So kind of trading counterintuitively a little bit in the cattle. And if we close down here, which it looks like we're going to, this is really not good news. It's closing below that very key support 200-day moving average. So you don't love seeing that. And the feeder cattle are really quite heavy on a day where corn is up, but not a whole lot. So that's not a big vote of confidence in the feeders being the leaders. And then as far as hogs are concerned, yeah, you're right. We're down and we're just kind of staying there, but we're into new lows or new recent lows for that August contract. That's not what you want to see. And I don't know if we need to see a big flush out from here in hogs, but it doesn't seem like we're able to find that bottom just quite yet. And part of that's concerns over demand. Now, weather seems to be getting better. So I wonder if we look back 2 weeks from now, we say, oh, wow, this demand is really good and better than what we were thinking. And not just for livestock or protein, but maybe for everything. And that might change things. But for right now, that is a concern.
I agree with you. That's very well spoken. Thank you very much. Great content. Ted Seifried, Zaner Ag Hedge in Chicago. Thanks for being on. We're going to bring it back to Nashville so I can throw this over to Janet.